We'll start with the true and false review from your study guide. Okay, so it says, because cash transactions occur more frequently than other transactions, there are more chance for making recording errors affecting cash. That is true. You can make lots of errors if you're not careful. Number 2, when a deposit is made in a bank account, the bank issues a check. Remember, deposit is made in a bank account. The bank will issue a receipt and give you a receipt instead. Number 3, there are 3 types of endorsement commonly used: blank, special, and restrictive. And then again, that's true. Remember, our blank, anyone can cash. Special is made out to another individual or business, and restrictive, it only will be, one thing will happen with that check, and it's normally a deposit. A check written with a blank endorsement can be cashed by anyone who has possession of the check. And again, that one is true. Okay, next, when writing a check, the first step is to prepare the check. And again, that is false because you want to prepare the stub first of all. That way you will not forget to record it. 6, most banks do not look at the date of the check is written and will withdraw money from the depositor's account at any time. And that should be false because they do look at the date of the check, and if it's written at a later date, that is called a post-dated check. Number 7, the amount of the check is written twice on each check. And that is true. It's written once in words and once in numbers. Number 8, a check that contains minor errors can be corrected neatly and initialized. And again, this isn't something that I covered in here. We covered it as freshmen, but that is false. Again, if you make errors on your check, you should be redoing the check. An important aspect of cash control is verifying that the information on the bank statement and checkbook are in agreement, and that is true. And that is called reconciling your bank statement. An outstanding check is one that has not been issued. And again, that is false. An outstanding check is one that you have written, but the bank has not received yet and taken out of your account. Number 11, banks deduct service charges from customers' checking account without requiring a customer to write a check for the amount. And again, that is true. Remember, the source document for that would be a memorandum, just a short explanation of where the money went. 12, not only do banks charge a fee for handling a dishonored check, but they also deduct the amount of the check from the account as well. And that is true. So if you have a dishonored check, it'll take out the amount of the check plus the fine or the fee. 13, the journal entry for payment on account using electronic fund transfer is exactly the same as when the payment is made by a debit card. And that is true. Again, it is money taken out of your account and a memorandum is written. The source document for electronic fund transfer is a check number. And I just kind of blew that one. It is false because it is a memo. 15, the source document for a debit purchase is a memo, and that is true also. 16, the purpose of petty cash fund is to make small cash payments without writing checks, and that is true. 17, businesses use petty cash when writing checks. It is not time efficient or time or cost effective, and that is true. It's usually for small payments. 18, a petty cash report is completed at the end of each business day, and that is false. The only time you prepare that petty cash report is if you run out of money in your petty cash and you need to replenish it, or at the end of the month. 19, a memorandum is a source document for the entry to record and replenish the petty cash fund, and that is false because you write out a check. to go get some more money to replenish the petty cash fund. When a petty cash fund is replenished, the balance of the petty cash fund increases. And that is false. It only increases when you've established your petty cash fund. You open up your petty cash fund, you increase it. When you replenish it, you're just putting the money back in there that you've spent. And so the amount is the same amount as you started with. Okay, next we're going to take a look at our transactions. Receive bank statements showing bank service charge. In this situation, we are going to debit G, which is miscellaneous expense, and we're going to credit A, paying cash for our service charge, which is a miscellaneous expense. 3.4, receive notice from the bank of a dishonored check from J. Erlinson. Okay, so our cash is going to go down, so we have to credit cash, and we're going to debit their account, J. Erlinson, which is an accounts receivable. Because now they owe us not only the amount of the dishonored check, but also the fee. 5.6, paid cash on account to Fargo Supplies using EFT. So if we paid cash, we're going to credit cash, and we're going to debit our accounts payable, Fargo Supplies. 7.8, purchase supplies using the debit card. Supplies is going to be debited. That account is going up, and we're crediting cash, which is going down. 9.10, paid cash to establish a petty cash fund. B, which is petty cash, is going up. We're starting our petty cash fund. And A, cash is going down. Paid cash and put it in our petty cash fund. 11.12, pay cash to replenish the petty cash fund, $50. Supplies was $35, miscellaneous $14, and cash short was $1. So the amount of our petty cash fund, $50, is going to be credited. And then D, which is supplies, will also have miscellaneous expense, and cash short and over will be debited. Okay, then to our terms. A bank account from which payments can be ordered by a depositor is F, a checking account. A bank from which lists checks, currency, coins, account holder, and is adding to a bank account would be H, a deposit slip. A signature or stamp on the back of a check transferring ownership would be K, which is an endorsement. 4, an endorsement consisting only of the endorser's signature, and that would be B, a blank endorsement. 5, an endorsement indicating a new owner of the check would be Q, a special endorsement paid to the order of so-and-so, and then you sign your name. 6, an endorsement restricting further transfer of the check's ownership would be P, a restrictive order or restrictive endorsement, such as for deposit only into my account, and then your signature. A check with a future date on it is O, a post-dated check. 8, a check that cannot be processed because the maker has made it invalid is R, a voided check. 9, a reported deposits, withdrawals, and bank balances sent to the depositor by a bank would be a bank statement, and that shows all the information, all the activity in your account. 10, a check which has been paid by the bank is C, a canceled check, one that you've written out, it's cleared the bank, they've taken it out of your account. 11, a check that the bank refuses to pay is I, a dishonored check. 12, a check dishonored by the bank because insufficient funds in the account of the maker of the check is L, an NSF check, non-sufficient fund check. 13, a computerized cash payment system that transfers funds without the use of checks, currency, or other paper documents is J, electronic funds transfer. And this happens a lot of ways. You can have automatic deposit, you can have your bills paid electronically, and so forth. 14, a bank card that automatically deducts the amount of purchase from the checking account of the cardholder is G, a debit card. 15, an amount of cash kept on hand and used for making small payments is M, petty cash. 16, a form showing proof of petty cash payments is N, a petty cash slip. 17, a petty cash on hand amount that is less than the recorded amount is E, cash short. And a petty cash on hand amount that is more than the recorded amount is D. And remember, D, cash short over, the account cash short and cash over and short, or I should say cash short and over is an expense account.